What's up, guys? This is Colin Silva, and as you can see on my screen, this is Step Index, and this is simply why you shouldn't neglect the power of this powerful strategy that I shared last about Step Index. You can see my trade. Look at my trade on Step Index. Do you see them? Took my buy right here, buy around here, and this is my target, my TP area. Just as you see, price is heading there. So this trade has been holding. This is 1 hour time frame, so you can see the trade has been holding for almost 24 hours now, and I've still been holding this trade. Very simple. How I got this entry is very simple. I'll show you how I got this entry. So quite simple. Okay, so look at it, guys. Look at it. Very simple, and I'll explain this to you. Look, so this is where I got my entry from. You can see, I believe by now you should know that's the condition for using this strategy, but if you don't know, I will explain it to you. This is where I got my entry from, just right here. I got my entry around this area here, and trust me, my stop loss was just right below this moving average. As you can see, this is 50-minute time frame, right? 50-minute time frame, entry right here, and stop loss at this other blue line here. You get, so I could enter this trade, and then the trade was moving all the way to the upside. Look at how the trade moved, still going in my direction, right? So however, I have the boldness to still hold this trade because I'm not just trading with just indicators, I'm also trading with price action. So when I go to my higher time frame, I can clearly see the projection of the next direction for Step Index. I can boldly say Step Index is coming around this area. You understand? And that's why I am still holding a certain percent of my trade. I've taken partial profit on this trade. I'm still holding a certain percent of this trade because I know where it's going to. So I'm holding it for that. However, my trades are break even right now, and partial profit has been taken. So let's get back to why I took this trade. Clearly 15 minutes gave me this entry, as you can see. So let's mark it out. 15 minutes gave me this entry right here. This is where I got my entry. You see that, right? With 15-minute time frame, entry was taken there. Why? Green moving average crossed below this candlesticks, and then the yellow moving average was above the red one, while the stochastic oscillator was at the oversold level. So this gives me a sign of a buy. It gives me a buy condition. I'm going to show you how to set your indicators like this, so just chill and relax. However, if you're new to this channel, make sure you hit that red subscribe button right now. Hit it right now, turn on the notification bell so that you'll be notified once I drop a new video like this. You get, so thank you. But however, just so you know, we're trading synthetic indices. You can see on my screen, just crash and boom, volatility, Step Index, and range index. If you want to create an account, the link is at the description of this video to create an account and start trading synthetic indices. Good. So back to what I'm saying. Entry was here, 15-minute time frame. If I go to 5-minute time frame, don't go above 15-minute time frame using this strategy. Just 5 minutes, 1 minute, and 15 minutes is it's good for you. 5 minutes, 15 minutes is the highest you should go. It's a scalping strategy. But if you plot it on that is, if you go to a higher time frame, especially with using price action strategy, you can be able to see even more than what you were seeing on those lower time frames. So you guys always ask about zoom level. I'm showing this right here. Zoom level is the third zoom level. So this is the fourth zoom level. You pinch it once, pinch out once. Okay, I over pinched, sorry. You pinch out one, second zoom level, pinch out two, third zoom level. This is what we're using for this strategy. You get, so thank you. Lastly, we've got in condition. So let me show you the indicators. Most of you will already know the indicators, but for the sake of those who don't know it, please just watch this video till the end, because I want to show you another trick with this strategy. So first indicator is the moving average. I'd like you to take a screenshot. I want this video to be too fast. First moving average, period 3 shift 0, method exponential, applied to typical price, style 2 pixel, yellow. So take a screenshot now so that later you can write them down on a paper and set the indicator on your screen so that you can understand it well. You get, take a screenshot, then write them on a paper. you write moving average, you write the parameters, and then you set it by yourself. So the second indicator is moving average, also period 60, shift 0, method simple, apply to close, style is 3 pixel, color green. So take a screenshot right now. You click done. Third moving average, period 7, methods shift 0, method is simple, apply to close, style is 2 pixel, color red. You click done. Take a screenshot as well. Thank you. So the next indicator is stochastic oscillator, whereby the K period is 1. Please take a screenshot also. K period 1, D period 1, slowing 1, price feed low/high, then method simple, main 3 pixel. Use the color of your screen. This is where a lot of you guys are getting it wrong. Use the color of your screen. You can see color of my screen is white, so that's why I'm using white. You get right? Beautiful. So use white on that. Then you come to levels. Levels is 20, 80, and 50. This is how you add levels. If you click on the plus sign here, the plus sign, you'll be able to add levels. So you can see my levels are 20, 80, and 50, whereby we use 80 as overbought, then 20 as oversold, and 50 as the middle point. So you go back, then you click done. As simple as that. Then thirdly, you add the Ichimoku. You take a sun, you set it at 9. The Kijun set it at 26. Seku span, set it at 52. This is just the parameters. Then when it comes to the Tekken stand for the styles, you put it on blue color. Then the Kijun, the Opkumo, make them 1 pixel and use the color of your screen, because they don't need to appear. You get? So that's all. Please take a screenshot also. Then you click done. Last moving average, don't put it on main chart, put it on indicator window 1. Thank you. Click on moving average. You select moving average, period 3, shift 0. Please take a screenshot. I'm so tired right now. Take a screenshot, please. The method is exponential. Apply to previous indicator data. The style 3 pixel. Yeah, so please what should I say again? Take a screenshot, and that's all, guys. Take a screenshot, that's all. So on the last video, I talked about this same strategy. I promised you guys a giveaway, which I'm clearly going to do. Today is what? Today is Monday. So that giveaway, I'll do that on Wednesday. Yeah, on Wednesday evening, I'm going to go to the comment section of that video to select 2 people who I'm going to give them $100 each on their Deriv account. So if you are watching this video now, just go to the previous video which I posted, this step in the strategy, and go drop a comment there. If you watch the video, you get the instruction of the comment you should drop. You get the instruction of the comment you should drop, because on Wednesday I'm going to be selecting the people who are going to win the giveaway. So that's all for now. That's it. So you've gotten the parameters. So now how should you use this strategy? 3 conditions. First condition is that allow this green moving average to cross below the chart. You can see now, allow it to cross below the chart. First condition. Second condition, the yellow moving average should be above the red moving average. These are conditions for a buy. And lastly, this Ichimoku, this stochastic, this green and blue and yellow line should be at the oversold level. Then you can place your buy. You get first condition. Hope you understand. Good. This is a point where this is an example of in case you are planning not to follow the 3 conditions, you are going to lose your money. Now, the green moving average crossed above the chart. Good. Red is now above yellow, which indicates sell. But look at here, it is at oversold level. So, but it bought. So this means if you fail to wait for the third confirmation, you are going to lose your money. As simple as that. The market doesn't care about who you are. So again, just follow instructions, please, if you want to make money with this. Again, at this point, green moving average crossed below. First condition, yellow is above the red. Second condition, and look, oversold level. When something is oversold, we will expect it to buy. When something is overbought, we will expect it to sell. You understand? So now 3 conditions are made. What happened? You place your buy around here, you get into your buy, and you start watching. Once this moving average gets to 80, you are out of the market. You see how it moved, and then go to 80. It's still going, not yet 80, and market is still moving. You can see 80 before you take your profit out of the market. 80 is simply overbought. Something that's overbought means it's not getting ready to come down. That's just how the simple concept. For those of you who are the indicators on, we're done to you. So that's it. We got the low, we got the high. Okay, at this point again, it happened. Market play that way. So for sell, I'm just yeah, beautiful. This is a very good sell example. Green moving average crossed above the chart and red above yellow indicator, yellow moving average, and look at it, overbought. Overbought means it has bought for too long and it wants to sell. So what do? You jump in at this point and look at the sell. And the beautiful thing is that your stop loss just needs to be above this moving average. Just give it a little space. Put it above this green moving average. Set your stop loss above the green moving and allow it to ride all the way to the downside. Trust me. If you enter this market here at 6, let's just do a little mathematics here. If you enter this market at 8665 and your stop loss is at 8668, that is, you are risking 3 points, right? And look at what you make. It's still coming down. This is where it got to the 90 level at this point. So this is what you make from 8665, right? From 8665 to 8635. That means you've made 30 with a risk of 3. That is a 1 to 10, guys. If you risk $100 on that trade, you've made $1,000. And let's assume after then you started watching the market again. These are just consolidation. You shouldn't want to trade this kind of thing because price hasn't gotten below this chart. You can see it was still just consolidating around here. None of the conditions were met. Beautiful. So this is where you would have lost money right here, right? So price crossed below it at this point, and then where's the yellow? Yellow was above red at this point also. You come here, you say, okay, it's still at oversold level, and then you take a buy, right? Your stop loss will be below moving average. Then it will come down and hit your stop loss, right? Beautiful. You just lost 1%. You remember you just made 10%, you just made times 10 just now, 1 to 10. So if you're risking let's say 1% of your account, you just made 10%, right? On that trade. So now you lost 1%, so you still have 9%. Let's just continue the mathematics. So you kept on watching the market. That is if you are the person that can control your psychology. You don't just jump and start looking for another strategy simply because you hit one loss. You get? So nothing is 100%. That's one thing you should know about this whole thing. Sorry about that. Okay, so that's it again. So right now, this is another opportunity again. This is another opportunity for this trade. I'm not going to be try to make anything paint anything blue. Again, it crossed below here, and this is a very clear condition for a buy. You entered again, stop loss below. Let's say since it crossed below, you entered around here, stop loss below here, and then what happened? Price came down again and hit your stop loss. You've lost 2, right? 2% lost right now, and you are still at profit of 8%. Good. Let's just calculate more. So now it crossed again below the chart again. At this point again, what did you do? You got into the buy. Yellow is above red. You got into the buy again. Stop loss now is below the moving average. So because you have this low before, you want to put your stop loss below here. So let's calculate again. If you enter this trade around here at 8643, stop loss is at, enter this trade at 8643, stop loss is at 8637. That is 6 point risk. You're risking 6 points, and look what you made, guys. This is where it entered, touched the overbought level, right? Overbought level was triggered right here, and then what is the difference? So we got in around 8643 to here where overbought, where it entered, touched the 80 level, which was here. Beautiful. So 80 level was touched here. 8643 to 866, let's just say 8663. That is 20 profit. You risked 6 and then you made 20. So that's like 1 to 6 times 3, 1 to 4, right? So remember, you were 8% profit before. Now you are now 12% profit. Isn't that beautiful, guys? That's so beautiful. So you made 8% profit on that. So as so on and so forth, as you keep on going, this one you make money, this one here you make money from this one. So that's just how the strategy is. This one you make a whole lot of money on this one. So that's just it, guys. Thank you once again for watching. I remain Collins Eva. Yes, Collins Eva. And I would also like you to go learn some chart patterns, especially on learn some chart pattern like the head and shoulder. I don't know if you can see right here. Just look at this. Beautiful. So look at it. You can see chart patterns where I just get to like look at for myself and, you know, just to get my trades better than it's supposed to be. So you try and make yourself better every single day. So thank you once again for watching. I remain Collins Mva, and please make sure you subscribe to this channel. Click on the link at the description of this video to create an account with Deriv, and follow our Telegram group. The link is at the description of this video. Follow us, our Facebook, and also follow our Instagram. Thank you very much, guys. Peace.